where you find investors and kind of what's been their feedback back to you in terms of being involved with some of your transactions.
Sure. So it's a great question. So I come from Silicon Valley. I sold real estate there a long time. I have a good database of friends, clients, business associates. And as you can well imagine, most of them are fairly well invested in the stock market. They have significant stock market investments. And so one of my approaches is just talk to them about diversification, right? I'm a real estate guy. I'd say in my personal portfolio, half of my net worth's in real estate, half is in the market. And in the stock market, I have a professional advisor and I just do what he says. Okay. I trust him. He makes recommendations and invariably I just follow him. So I know I don't know Wall Street. I don't know the market, but I see benefit of having some of my capital there. And I also see the benefit of having some in real estate, what I do know. So, with many of my past friends and clients, it's a discussion of just diversifying your portfolio, maybe taking 5, 10, 15% of your net worth and transitioning it to real estate. And I think most people understand the value of real estate, right? They live in major metropolitan areas. They see the prices of houses going up. They understand real estate is a secure long term investment. So I think what holds most of them back is either they don't have the knowledge and expertise to run these assets, or they just don't have the time. And I can tell you, one of my best investors is a young woman who used to work for me at Coldwell Banker in Menlo Park. And her mom and I were the same generation. The daughter joined the mom. The daughter's now probably 45. She manages 3 offices in the Bay Area, okay, probably 250 agents, makes great money, mother of 3, and she had no real estate investments. Okay, so here's someone managing hundreds of real estate agents, certainly understanding the value of real estate. But the truth is, her husband has a demanding W 2 job, career job. She's got a demanding job. Trust me, trying to herd 250 residential
Right.
agents is a big lift. So she started to invest with me, and so she understood the value of real estate, but she doesn't have the time to breathe to really look in it. And so I find a lot of my investors are of a similar situation in life between work and family. They're just jammed, and they appreciate the opportunity to put some of their net worth in real
Yeah, that's
estate.
huge. So what's been her take in terms of, say, performance, the time she has to be involved, any tax benefits that she's received? Like what is she telling you that she sees the benefit and the value of doing that diversification?
Well, I'll say she speaks with her checkbook because she keeps investing, right?
Right.
And so the proof's in the pudding. And as you know, when you do well by your investors, you now have a repeat investor. So the next deal comes along, they go, "Hey, Darin put me in a good deal over here. He's got another one in the same market. I'm in because I've seen what he's done." So she's happy with no headaches, regular distributions. The added benefit for her is she's an active real estate professional and therefore well situated to take advantage of the passive losses that syndication investments can generate. So she's a pretty happy camper. And I guess the other thing I would say is I never promise the moon to my investors. In my mind, if you can get 7 or 8% cash on cash return, if you can get IRRs of 14, 15% in a low risk investment, that's a
Right.
win, right? That's a win. I mean, people should be satisfied with that. If they're not, then maybe their expectations are a little askew. And granted, we've had 10 years of unbelievable growth in multifamily. COVID didn't really slow it down. COVID made us take a breath and it kept on going up. One thing that I have from being in the real estate business 40 years is I've been through a few cycles, I've been through a few markets, and I don't know when we're going to have a little correction, but I know at some point we are going to have a little correction. And so
You say
I
little.
believe
It's funny because like you were doing business in Silicon Valley. California is the biggest up and down real estate market there is, right? I mean, so you've been through some markets where it's not just a little downturn. In California, you could have some serious swings both up and down.
Yeah, it would vary depending on the area. So, like, for example, on the peninsula during the subprime crisis recession, values on the peninsula, good upper middle income neighborhoods, maybe they dropped 5 to
Oh, that's
10%.
not
So
bad.
it
That's not
wasn't a
bad. Right.
bloodbath. But out in the Central Valley, 2 hours from San Francisco, where developers just kept building tract home, tract home, tract home, there you saw values drop
Oh,
50%. So you're right about that. So I think it's a little bit market specific. And certainly, I lived through the dot com boom, I lived through the dot com bust. And so somebody who's gotten into the real estate space in the last 5 years hasn't been through these cycles. I sold houses when interest rates were 16.5% adjustable. So it gives you a little bit of perspective that it's not always up, 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 and you have to kind of be smart and savvy and understand there's going to be some downturns. And what I would say is if you use leverage properly, if you're properly capitalized, meaning good reserves, you can ride out some difficult times as a real estate investor. And as long as you ride out those times, I can almost guarantee you when you come out the other end, you're going to be happy you stuck in it. Because long term, the trend for real estate just has to be up. I don't see any other way it's going to
yeah.
go.